I'll now invite to the podium the moderator for this particular session, Mr. André Laboul, Iops Chief Policy Advisor. I also invite the panelists, Mr. Moch, Muchlasin, Executive Director for Pension Fund Supervision, Financial Services Authority, Indonesia. I also invite Mr. Will Price, Chief Executive Officer, G3P Global, and Senior Advisor on Insurance and Pensions, United Nations Capital Development Fund. Also coming to join the panel is Dr. Elio Sanchez, Deputy Superintendent of Private Pension Fund Administrators, Peru, and Vice President of International Association of the Latin American Pension Fund Supervisors. Gentlemen, you can proceed to the podium. Let's give them a hand as they come in. I'll now hand over to the moderator, Ms. Laboul.
Good morning, or as I would say in my country, bonjour tout le monde. So this session is associated by our Master of Ceremony. It's about providing pension for informal employment in developing countries, challenge and opportunities for policymakers. This is an extremely serious issue, and you know that, you all know that. And the minister yesterday shared very alarming figures. First, it quotes a UN study which revealed that 91% of the workers in sub-Saharan Africa do not save for old age. 91. And the main reason were identified as low earning, high informality, and also high financial illiteracy. Another study said that the informal sector in Africa is over 86% of employed population. But this is not only in Africa that we have this situation. This is really a worldwide issue. And this is serious, as I said, because this is an issue of subsistence. If you don't have a pension, you are at risk, in fact, not to have the resources to stay alive. But just like that. Of course, you could potentially count on the children. Children are moving to cities, and this is not really the solution. So, several initiatives have been undertaken. First, to try to apply the formal scheme to the informal sector, but it's not working. But all the studies show that we have a big problem when you try to do it. Another way is to set up a universal pension scheme, but that's very expensive. And all the countries cannot necessarily do it. Another way is to develop dedicated scheme for informal sector. Here we have a lot of examples, and we have a lot of examples in Africa, and I count on the representative, at least of these countries, to explain a little bit how it's working. So Kenya, for instance, Ghana, Rwanda, Uganda, Benin, so they all have a special program. But at the end of the day, we have a big problem because we really have a lot of people in the informal sector which do not have the resources to save, or also they're not aware of the need to save, or just some wish to do. So we need a quite important communication strategy. We need to build a financial education program. This is essential. And when developing scheme, it's important to also have a scheme adapted to the informal sector. For instance, to allow for irregular contributions, to use as much as possible the technology, the mobile money, for instance, to have also adequate payout, to promote annuities, not necessarily lump sum, to have a simple design, to have index scheme, and so on and so forth. So all this means that this is complex, but this is important. And today let's try to identify solutions. And I think that this is the best place to do it because you all have a lot of experience in this field. And by the way, let me raise, before giving the floor to the panelists, a question for you. Those IOS members from a country which has a universal pension scheme, please raise your hand. Wow. So, 5, 6. Those from countries which have a dedicated pension scheme for informal sector, raise your hand. Not a lot, huh? So, I really wish to know what the others are doing. And so the first question is about migrants, those who have a special pension scheme for migrants. Raise your hand. Okay, so my dear panelists, you have a lot of work now to convince and explain the situation and provide some solution to our colleagues. So we'll start with Elio, please.
Good morning, ladies and gentlemen, authorities and officials from Zimbabwe and different jurisdictions. I have to say thank you first for this opportunity to share with you some ideas and challenges as well about social security protection for self-employed and informal workers of Latin America, but focusing in Peru, in the particular case of Peru. So let me begin with, and I will introduce some features about the Peruvian pension system. In Peru, we have non-contributory zero pillar focused in citizens older than 65 years old. It means tested, and is focused in extreme poverty situation. It began 10 years ago. Okay. Then we have a contributory pillar, the pillar 1 and pillar 2. The pillar 1 is a DB pension scheme, and the pillar 2 is a defined contribution pension scheme administered by specialized pension managers, and the DB system is just is administered by the government. But the interesting situation here is that both systems must compete to enroll new workers. No? That's not common, but they compete. So a worker must be enrolled or in the DB system or in the DC pension system. Besides, it's not in this slide, but we have a voluntary pillar administered just for the same pension managers companies that are private. They are specialized. The banks are not allowed to offer a pension product, for example. And then we have some other features. We have multi-funds. We're trying to move to the target date funds. And then we, about the benefits, Peru offers similar like other jurisdictions, annuities, program withdrawals, but since 2016, the Peruvian government approved the possibility to have a lump sum benefit, which is the most popular. 95% of the new workers who want to retire take this possibility. Okay, this is a map. Let me move to our labor market. In Peru, this is the situation for labor market. We have almost 30% of the labor force enrolled to a pension system, but contributing on a regular basis. I mean, they are employed, they are in the formal sector. The other 70% are self-employed and informal workers. As Ambrosio mentioned yesterday, there is a tiny difference between being a self-employed worker or informal worker. The other feature in this situation is that there is a group of workers that are moving on a permanent basis from the formal to informal or different category, employed to self-employed. And this is there also is a large group of the population, the labor force, that they have low income level. They are in a low income level. What does it mean? It's lower than the minimum salary legally approved in Peru. Yesterday we heard something important, and the issue here is that since the pension regulator and supervisor, we decided to know more about our workers. Okay? So, in that sense, why? Because we have different hypotheses about why they are not saving or not. So, from the pension regulator, we commissioned a prestigious company to carry out a nationwide survey to a sample of the labor force of Peru. The first question was, do you consider it important to save for retirement? 98% answered yes, it is important. But when we asked, are you doing something? The 62% answered no. They are not taking any action to save for retirement. It's very similar like the percentage of the informal sector. You remember? What happened with this 31%? They are saving because they are employed, so they are forced to save. They are not doing. There is not a significant percentage of workers that are voluntarily contributing to the pension system for retirement. Who are not saving? Young workers and low-income workers. This is the profile. The reason, which is the main obstacle for saving, the lack of resources and the low access to the labor market. So, first thing, I don't have money to save. I have a low-income worker. I am unemployed, so I am a self-employed worker, so I am not forced to save. Then, some procrastination. I have many years. I have no possibility, no attractive options, financial literacy, and I would like to enjoy my money today. So those were the most important answers. It depends. It's similar with all the cohorts, for example. And then we ask, what do you think will be your source of income at old age? And the answer was shocking. The first answer was pensión 65. Pensión 65 is a zero pillar, but for extreme poverty situation. That was shocking for me is to have a little percentage of young workers that expect to receive a non-contributory pension. Just this a little percentage, but it's shocking because it's not a very good perspective. Then family transfers. The most important, number one, zero pillar, non-contributory. Then family resources, and then workers expect to continue in the labor force after 65 years old. Third, the fourth, to receive a pension from a contributory scheme, pension scheme, but they are not saving. so they are postponing the action to save. Okay? And then other social programs. This is the alternative. You see in the last to receive a pension, for example, the young workers expect to receive a pension, but they are doing nothing to save. So it's a challenge to improve coverage. So at this stage, I must say that building a pension requires a significant effort, and a worker must save for at least 30 years to receive a contributing pension. Furthermore, life expectancies increase, and workers will also have to make more than effort to save. So to deal with this challenge, we require solutions. First, this is a chart that I took from the Inter-American Development Bank publication. In here, I will try to show some barriers based on the demand side. Demand side limit capacity for saving, some behavioral biases, lack of liquidity, another barrier, and the lack of financial and pension literacy. Just to put in very simple words, workers don't save for retirement because they don't have money, they don't know how, and they don't want. Three reasons. From the supply side, there are lack of incentives for encouraging low-income and self-employed workers to save. They are just interested in employed workers, just that. Administration fees are also an issue, and the lack of adequate mechanisms to do or to make voluntary savings. It's very difficult for a self-employed worker to make pension contribution. Let me explain. In Peru, we have a centralized platforms to contribute, but it's difficult. This is elaborated just for employers. So it's very difficult to make some, to use these platforms to make some contributions to the pension account. And besides, managers have scarce knowledge about informal workers. We must be close to informal workers. We must know. For example, that was the reason because the pension regulator commissioned this nationwide survey, because we wanted to know more about the informal sector, the self-employed workers. How can we design some mechanisms or make some actions or interventions if we don't know our client? Our client is the worker, the citizen. So we must do some action for that. Second, let me move to this. This is a part of a publication from IDB. Okay, but the interesting thing here is that Mexico, Colombia, Peru, and Chile, they make some initiatives with IDB. While trying to tackle with the behavioral biases. So this is an international experience. So let me move quickly to the results. For example, to push some message, some default enrollments and contributions, some other alternatives that was elaborated for these groups of self-employed workers. Just to have a time restriction. So let me show the effects of retirement savings. But the first, messages and reminders are not conclusive. There are no conclusive. For example, in some jurisdictions, for example in Mexico, we have no results. The SMS messages by phone, no effect, but it does have a very, very interesting result in Colombia, for example. But not conclusive because they use a Facebook. But Facebook has a very good result for workers, at least in Peru, older than 40 years old. For young people, TikTok, and another social network facilities. Active decision with automatic depth, some good results, and to simplify the access or to give more financial education. So to deal with this challenge requires new solutions. The opportunity is that there are new allies. First, technology. Technology makes saving easier and more accessible for workers. And then, behavioral economics illustrates how to help people to overcome those barriers. So we have some lessons. Solutions, for example, linked to a source of income have a positive impact on generating voluntary savings. Then reminders. Reminders are easy to implement and cost effective, but with a little impact on saving for retirement. That requires new strategy. From my particular point of view, that we need is to implement reminders depending on the target population. For example, at the Superintendency, the pension regulator, we made a multivariate analysis just to profile, to have clusters of workers and to send specific messages according to the specific situation. So we are trying to implement that. Then it is important to make it easy to save, simple and automatic as possible. Behavioral and technological tools are necessary, but not enough. We need to make easy, and we have another barrier that I took for the last. Our regulation is very strict, complex, bureaucratic. So we implemented a regulatory sandbox just to offer the opportunity to have some flexible products for saving. The interest here is that as the superintendency is responsible not only for pension, for the pension sector, but also for banking activities and insurance. So we implemented this regulatory sandbox. The interesting thing here is that the first innovative product offered to that we are analyzing at this moment, came from a pension entity, not from bank. So we're analyzing. Besides, we have also a pension manager that makes a commercial alliance with gas stations in another stores, for retail stores, for example. Our objective with this is to simplify the model for a very short time, maybe 3 years, giving the opportunity to be flexible, to offer an innovative product. That's what we're trying to implement here. I have no time, so this is some criteria that the pension manager must complete to have this authorization. As I told you, at this moment we are analyzing a new idea. So we're trying to make a checklist with these criteria and to provide some benefit, to be flexible, of course, again, to be flexible with this. This regulatory sandbox, of course, has opportunity for group application, not only one. Maybe for an association, we have 4 pension managers in Peru, and also the possibility to coordinate with other local or international sandboxes. That's possible. So we try to be very, very flexible with this. Just to finish, some final remarks. Self-employed informal workers requires a continuous study and profiling. Self-employed workers is a group that is not homogeneous group. You must analyze. For example, in Peru, despite agricultural sector, the second most common activity is a commercial activity. Then the informal sector are taxi drivers, truck drivers, example, and other activities. So in this group is different. They think different. It's completely, it's impossible to ask a low worker, a low income worker, to save $30 per month as a formal worker must pay. But it's different if you take $1 per day. It's different because they receive the income on a daily basis, maybe on a weekly basis. So it's different. You have to tackle with these obstacles. So we have to be flexible with the regulation. We're analyzing, as told you, we have just one that have been implemented. We're in a second. And you must remember the reason for not saving. Lack of income, very low income workers, but you must have micro contributions. You must prepare for your platform for this. And you have to tackle also with some behavioral biases, procrastination, optimism, risk aversion, passive choice. So the possibility, for example, to have a default option to save, saving for consumption, or when you pay your bill, for example, electricity or water provision, you can put one source, for example, or a percentage of this bill just to save for retirement. That requires a very elaborated ecosystem just to save. And that's all. I have no time, so thank you very much for your kind attention.
Mr. Minister, Excellencies, and ladies and gentlemen, good day. My name is Moch, and I represent the Indonesia Financial Service Authority. But before I begin my presentation, I do apologize that I put some rather beautiful image of Bali, the island of gods, that is the reserve visa what you will see and experience in the next Iops or OECD Global Basis Forum. Hopefully it will not distract your attention so much, so we can just about the issue we have. So, as many emerging countries, perhaps that Indonesia economic growth bring a lot of opportunities, and some opportunities come from informal sectors. We have a unicorn startup like Gojek, Grab, this $1 billion industry, and also we have a really vast, famous e-commerce like Tokopedia and Shopee. And the new business model allowing individuals or small groups or even family to start their own business and not enroll in any company at all. So from the data we see in 2017 that among the labor forces, more than 50%, so 67% is in informal sectors. It's grow up into 60s. So the growth of informal sector in Indonesia is much higher than the formal sectors. And I think we can expect another increases in a year to come. So with the labor force of around 150 million, so around 85% or 85 millions plays a role in informal sector, and the contribution to the country's GDP is tremendous. And thus, we, as a regulator, think that it is our responsibility also to ensure that this for informal sector has some kind of protection. So let me begin also with pension, perhaps as Elio also. We have the mandatory pension. So this is a universal pension starting in 2004 with the Amendment of Social Security Act, and just operated in 2011, so last year and around 12 years. And we also have the voluntary pensions much longer, I think in 1992. So it's different with other countries. We start from voluntary, but we start with mandatory a bit late. So if we look at the coverage of both mandatory and mandatory pension program and the voluntary pension program, again, don't look at the picture, just at the numbers. From formal workers in the mandatory pension program is only around 17 million. Yes, it is much lower than what the labor force are. And the informal workers is around 500,000. So, but year to mind is only around 12 years. And the voluntary pension programs were 2.5 million, 900 of them, 900,000 is in the informal sectors. So question that arises is whether these informal employees, we are not covered in a pension system, whether it's mandatory or voluntary, do they really have some sort of old age savings, or they don't just think that it is not really in their concern? So we look at the several type of investment in Indonesia, and we found out that capital market activities so far, this is also when we have a FSAP mission only this middle of this year, we have a discussion with World Bank and so on. It's by a bit surprising that most of our active investor in capital market, from around 11 million, 99% is individuals. So we see that around 11.38 million individuals are actively invest in capital markets, while corporate, including pension funds, only 0.2%. So we have to look at what the other studies saying of what is the informal sectors in Indonesia. From the gender, we look at mostly female, more than 63%. And if we look at the education, the biggest part is informal education, which is no certification, no formal school, and also dropouts. So they don't really finish their primary school. So then, after we learn from this, and also we know that Indonesia is a very young population. We have around 65%, 69% population, around 190 is in a young population in a population country. This millennials and also Gen Z is so important, both in economy and social. So what we do this is first, most of them are skilled labor and some of them are women. We know that 99% of capital market active investor is millennials and Generation Y and Z, and they are skilled workers. For me, the data is screaming that we are youth. And sometimes, one of our studies find out that young people, youth, is another extreme compared to old age saving or pension in other. So that's why they want to go to the capital market rather than join the public offer fund that we have. Then why? I think we are in the policymaker already do anything. We are discussing about how to increase financial literacy. For you who attend the technical committee meeting yesterday, our chairman, our chief executive already mentioned about financial literacy, and we're also talking about expanding the socialization and so on. We try also to enforce the voluntary pension for the company. However, we talk, we enforce, yet we are not really listened to those are millennials and the informal sector. So back to the slides, we learned that they are digital nomad. They are really, they are internet natives. They grow with as Dr. Dominic really mentioned before this session, that they are really fast to learn and embrace the digitalization. And so they're job hopping. They change company often, they change job often. And then, based on the study, the common pension structure, which we have right now in the occupational pension scheme and existing pension regulatory scheme, is put in test. Is it really, are we, this is the question to us in UNCDF, are we actually developing a pension scheme that are suitable for the young generation as they are today? So, let's go to the opportunities. We know that through some studies that we have to expand through digital marketing. So we have to put in force, when by mean we, it's not only the regulator but also industry association and so on, to try to tap into the digital marketing. And as Indonesian is very keen to use the e-commerce thing, why we don't collaborate with the e-commerce platform? So probably we learned from our colleague here, Elio, that Peru already have sample and so on. We are in a really beginning stages. We just launched the financial inclusion omnibus law early this year, just February, and some of them are really have a good environment for a more, let's say, community or more demographic friendly. And we hope that by using digital and adapting into the digital platform they already in place, we have to simplify the procedure, for example, in participant registration and other administrative process, and it increases flexibility, creating tailor-made scheme, which is not possible by current regulation, and creating ease of accessing bundling scheme with other familiar financial services product. And the other is for us as a policy makers, we have to know that one of them is policy or tax incentive. Is there any tax incentive right now? Yes, but it is still very limited. And as we discussed earlier in this conference also, I think that yesterday, that the question of equality, whether the incentive is effective or just wasting taxpayer money, is also right now is debated in Indonesia. So that's, ladies and gentlemen, that's the end of my presentation. But before I finish, shall we have some a bit knock jokes all together? Yeah, you know, I say knock and we'll say who's there or something like that. Shall we? Okay. So knock.
Who's there?
Will. Okay. Will who? Will really love you to meet in Bali next year. Thank you.
So it's a great pleasure to be here. Let me just check in the back, you can hear me because I'm a little bit... No. Okay, let me check now that at the back that people can hear me, maybe a little further away. Thank you. Well, so thank you, Commissioner Murati, Deputy Minister Mungawa, Julia Chilikova, and Iops President Rinaldi, and old friends Pablo and Brendan Kennedy, Darius Stanko. It's a great pleasure to be here in a sort of new incarnation. So I used to come to these meetings, and now the work that we do is building on experience when I was at the World Bank and in the UK, still with governments around the world, with international organisations, and working from the whole kind of span from setting up a pension system through to the kind of very details of the regulation. But what I want to talk to you today is a kind of new project that we're doing with the UN, United Nations Capital Development Fund. Before I get there though, I want just to, as a side note, say thank you to Zimbabwe as well as to the delegates. So 15 years ago I went to see Iguazu Falls in South America. And then when we lived in the US, I went to Niagara. And then yesterday I went to see Victoria Falls. So I'm glad I saved the best till last. And, As long as no one sees me do a presentation in Brazil, I'll just continue. So what do we want to do, or what do I want to do with this presentation? So it's a big issue, and it's quite a new issue, and that maybe people haven't focused on. So first of all, thanks to the OECD and Iops for putting it on the agenda. And what I want to do is tell you, or try and convince you, that it's important, that there are things that can be done, and in particular that there are things that can be done for individual countries sitting in this room. And we'll go through sometimes some quite sort of simple steps. The reason it makes sense to do this in the informal sector section is that lots of the solutions for migrants, people who are working in another country, a host country relative to their home country, also has some tie-up with the informal sector. And so we'll talk about ways, innovative ways to get people into a pension system. But the fundamental importance of sort of old-fashioned values, if you like, on administration, keeping an account for life, not losing accounts, good governance, investment, because lots of the solutions to get people in, to make contributions, are from lots of innovation, which is very welcome. But it's very important not to forget the old-fashioned importance of well-governed admin and investment, and pensions is a long-term business, so we need to remember that. So let me do the first one of, can I convince you that this is important? So, can convince you? Yeah. So let's go from the left-hand side. There are 281 million migrants in the world, and if they were a country, they'd just beat Indonesia as the 4th largest country. Those 281 million migrants send back to their families, to their home countries, $1 trillion a year, formally and informally. And most of that is to lower and middle income countries. That money supports 800 million family members. So you're talking about 1 billion people affected by this policy, who are actually, often low income, but there's a huge amount of money. So there's a great potential. But even more than that global potential for individual countries, it can be even more important. So some countries, take the example of Nepal, the remittances from migrants are 25% of their GDP. In other countries, host countries, migrant workers can make up to 90% of the labor force. And going forward, as you go to the right, you take this 281 million, you take the trillion, and if you're taking small amounts of this money into insurance premiums, you're talking multiple billions per year. And the claims will be hundreds of billions in the next 20 years, and we'll talk a little bit about that. And you're potentially talking about trillions of assets. Now, all of this seems sort of very optimistic and somewhat unachievable, because lots of the things that we just heard about the informal sector are true of migrants. So how is any of this possible? Number one is that the cost of remittances are so high, the average 6.5% of the value of the money sent goes in fees. Some corridors it's 10%. There's a UN Sustainable Development Goal target to reduce that to 3%. You can already do it for 0.5% or less if you do it digitally. So in many cases, you're not asking the migrant worker to find any more money. It's a question of repurposing the money they are already sending in the context of digital innovation and better payment platforms. So number one, that you don't necessarily need more money. Number two, and let me show you the next slide. This is a survey of around 3,000 migrants. Just look at the top bar. So the top is telling you in the red what you'd imagine. Most of this money, the majority of this money goes to just giving people, family members, money for consumption. But what's happening here is, of course, when those family members are old, the migrant worker is already the pension system for their family, and I'm sure lots of people in the room are partly fulfilling this function. But now look down at the lower red, the red line. A surprising amount of the money, 20%, already goes for savings activities. Now that's not necessarily just saving in an account, it could be saving into buying land, some property, an extra room that you can rent out. But there's already quite a high degree of saving, but it's often very informal. And one of the biggest challenges here is what happens if something happens to the migrant. So we're talking about this as insurance and pensions. The migrant dies, it's a disaster for their family, because suddenly that pension system disappears. If the migrant dies with life insurance, then the family will get a payout. the pension aspect is partly for the family members, but also for the migrant. Anyone who's been a migrant worker sending money back to the family, it can be very challenging because you're supposedly the rich person with the good job, and your family suddenly grows. There weren't so many at your birthday, but once you get the good job, suddenly you have more aunts and uncles and cousins and people who are asking you for contributions. It's actually quite useful in some studies that are done if the migrant worker is able to say, or indeed, even if it's an internal migrant and someone moving to the city from a rural area, if they're able to say, I'm sorry, the money is locked away, I have to give a certain proportion to the pension plan, and I cannot distribute it because that migrant worker at some point will be coming for their own retirement. And this also emphasizes another point and why it's useful to think about this as the informal worker, because people have diverse lives, not just multiple jobs, but the migrant worker from South Asia working on a construction site in the Gulf countries could have been an informal worker. They could have been a formal worker in their home country. They may have a business when they go back. And you've got lots of these different incarnations, lots of these different income streams. And the question is, how can you stitch them together rather than have lots of clever, innovative products in each individual stage of their life, which just leads you to have lots of small accounts, lots of accounts where there's not a very high balance, the rules allow you to withdraw, and you're never able to build up that long-term income. So let me skip through that. So I told you it's important, and hopefully we've established that it's important. So what about that it's practical? So just focusing on the global, the regional, and the country, not so much the individual parts of it. The global, well, firstly, it's these kind of conversations. So great thanks again to the OECD and Iops for putting it on the agenda. The Toronto Centre is a global think tank in Canada that focuses on regulation and supervision. We're publishing a note on this in the coming days. So it's globally getting attention. The regional is fantastically important. As we heard from the finance minister yesterday, lots of regional innovation or regional engagement, whether it's kind of more continent-wide, like the regional development banks, or more focused like SADC and the various regional elements. Because there is a big regional dimension here, and whether it's because mobile money is much more important in Africa than it is in other countries, thinking about what works regionally in terms of the way that people do their live their financial lives, if you like. And then it's also really important from the country level, and I'm going to go into this in more detail because it's the practical steps. So we heard yesterday about the example in the US of Uber drivers, and the whole kind of question of the gig economy, and that meaning that you're disentangled or you're disintegrated from a social security system, and those drivers won't get a pension. But that's highly specific to their country. So in the UK, there was a landmark legal judgment which identifies Uber as effectively an employer for the purposes of pensions, private pensions. And those workers who are Uber drivers have had their contributions by the company backdated to 2017. And now every time you use that gig worker, the Uber driver in the UK, they are building their pension. Probably not enough, but this is about steps forward. It's building retirement sort of a year at a time rather than guaranteeing 30 with a single policy. And those platforms, as we mentioned, or as we heard from Moch's presentation, Grab, Gojek, different platforms in different regions, those can all potentially be an important way into this because they are already digital payments, they are already digitally identified, and they already solve lots of the problems which bedevil pension systems in terms of enrollment and finding people. So now let's go through to some country examples. Now this is a busy slide. I realise now it's the Rugby World Cup, so just focus on the rugby ball in the middle, if people know what the ball looks like. But, and focus on just some of the countries. So the top left-hand corner, we're talking about the United Arab Emirates. Now on the one hand, tough country. If you're a migrant worker, you will never get citizenship. You will never get access to the social security that the citizens of those countries get. Nice sharing between the Gulf countries. So stony ground in some ways. But if you go to the UAE, you will have, in some of the Emirates, compulsory health insurance as a migrant, paid by the employer to mean that you are covered. The gender equality could be improved because domestic workers who are typically women have slightly less coverage than construction workers and other workers who are typically men. But there are actually now migrants having health cover and it's compulsory. In a part of the UAE, there's a compulsory defined contribution pension plan for migrant workers, paid by the employer again. And so there are the seeds, if you like, of things which can work here. If you look at other countries, many of the countries, South Asia, Philippines, have compulsory insurance for their own migrant workers when they go overseas, so you get a base level of life, health, accident insurance. And to take the example of Bangladesh, they recently extended that compulsory insurance to include employment interruption, which on the one hand sounds quite technical, but when Bangladeshi workers were faced with the tragic events which are unfolding in Sudan, they lost their jobs. They arrived back in Bangladesh, but they were the first cohort that got an insurance payout to mean that all of the money they invested in the time to get that job, and migrants often have to spend money to get the job, and they start with all that money was then repaid and they got something for their families. India and Mexico have both done innovative things so that a remittance provider, the worker working overseas, can effectively contribute directly back into their domestic individual pension plan. And in Mexico and India, you have a platform of well-regulated pensions. So let me conclude. I said that there would be some simple steps. So actually, just before that, we started a social enterprise called Pensions Across Borders, which is aiming to connect global donors, foundations, large companies, who, if a country had a good pension system with individual accounts, that they could transfer money into the private account of a pensioner. Because cash transfers themselves, sometimes they work, sometimes they don't. If you transfer the money into an individual pension plan of a 20-year-old, a 30-year-old, a 40-year-old, if they match that payment, each dollar of transfer has the potential of growing 8 times. And so it can be a very important way that you can leverage all the work that people have done now to have flows, whether it's from domestic employment, migrant workers, or international donors. So let's do a quick run through of what this means for you going back to the day job tomorrow. Number one, so review the flows of men and women. Are you one of these countries where migrant workers are very important? Data is available from the World Bank on flows, from the Institute for Migration on people. Number two, identify the gaps and the risks. Are you a country where you've got good universal provision, in which case maybe the migrant workers need less when they're overseas? Are they going to countries which have compulsory elements? And so what's your specific country corridor focus? Because you don't have to focus on 200 countries, you'll probably have 5 or 10 countries which are disproportionately important for you as a regulator. Number three, what are the improvements in a very practical way so you can stitch together these things in a better way? Bangladesh just launched a mandatory sort of basic pension payout, pension system, but they have a specific, so I'm holding up my hand for Bangladesh, a specific migrant pillar of that new social security system because it's important for themselves, so they built this in. Number four, develop the regulatory and supervisory links to the host country that's important to you. Again, not 100, there'll be 5 maybe that are really important. And think about the risks to my migrants when they're going to your country, and how we can make sure that you've got a better coverage. Work out those flows of data, and then review the products and thinking through what are the barriers. Because of course, when you're home, it's very difficult to pursue a claim if you're not in the country. Final 4 before I wrap up. The next financial inclusion review that you have for your country, these are very popular, often sponsored, often funded, often driven by a central bank or one of the ministries. Engage with it as you do as a regulator, but add into it the migrant aspect, your home and host country, when that's important to you. Focus on those cross-border payment aspects, because often pensions, individual contributions don't trigger money laundering rules. But if you come back after 5 years and you want to bring back a more sizable amount of money, maybe they will. So you can use the visa and the ID process as you transfer country to have good ID and have a bank account pre-identified that can receive your money and cut through lots of these rules which otherwise can make it very difficult. Number 3, support efforts to reduce the cost of remittances, maybe not directly you as a pension or insurance regulator, more as a central bank, but that unlocks the money, so you're not asking for people just to find a little extra where they don't have the money. And number 4, exactly what you're doing now, work at the regional, the international bodies to raise the issue and think through solutions and try and help the migrant insurance and pensions help round out the informal sector coverage that we were speaking about. Thank you very much.
to three panelists. Now I will open the floor for questions. I remind you, please do speak close to the micro. We have a problem here to hear at the stage, and also personally I'm getting older and older, and my hearing is worse and worse. So I would appreciate. Please don't be shy, because I can also ask questions to you. By the way, I have a short question to Will. You say that we have 281 million of migrants. I was surprised by the precise it is, but are you including illegal migrants?
So it's all, so that's all migrant workers. So some, obviously, that's all migrant workers, but obviously the precision where there's no kind of official trace is not there. So the number is almost certainly higher if you add people who've gone cross-border, and particularly where there's long-standing agreements, say between Nepal and India, where you're allowed to go in and out without visas, and people may be working across borders. But I think the main thing is it's a very substantial number. There's a lot of money, and for particular countries, as you go through your risk-based supervision, thinking, what are the key risks for me in my country, the people who have gaps in coverage or are contributors, and how do I reduce the risks of old age poverty? It's just going through the numbers that you have for your country and working out whether it's important for you. And the answer will be no for some, and will be yes for others.
25. But you have 138 million employed in Indonesia. So where are they, all these 100 million?
That's very interesting because the bodies or the agency that are responsible on the security, social security, is right now just tapping into the civil servants and then the army, which is around around 6 to 8 million, and also the companies that already have some kind of formal pension. So they are not really goes extensively into other type of employment. So yeah, there are some small companies, they are not really registered yet, and that's a lot of things. Thank you.
My name is Farooq Amin from Nigeria. It's a contribution and perhaps a question. And I think in trying to get macro pension, informal sector people on pension schemes, there may be the need for us to classify them perhaps into minimum 3 groups. We need to classify them to high-end earners, middle income, and the low income. And indeed, it's important because then you target them with different products that will attract them. For the very low level income, I think we need more than just providing pension schemes, but perhaps the participation of the entire financial sector, because for them, there may be the need for us to look at the financial health of this group. Can they even save? So perhaps what we need is to maybe boost their income in the first place so that they can handle some basic needs at home before they're able to save. So perhaps if we want to help these people, I think perhaps we need to consider it at a very high level. So that's one issue. And on the migrant workers rather, in West Africa generally, we signed, our president actually signed an agreement for repatriation of their pension, assets back to their countries when they retire. And based on this, the National Pension Commission also issued a special guideline to this effect. So if you work in Nigeria, we don't have a special pension scheme for the migrant workers, where you participate in the general scheme, but when you retire and you're moving home, then the guideline has allowed you to repatriate all your pension assets back to your home country. Thank you.
Thank you for the comment. I must say that there is an opportunity, for example, when you mention about the participation of other industry, maybe we have an interesting opportunity. Why? Because in Peru it became very popular an electronic wallet. For example, began one financial institution launched this possibility 6 years ago. It's supposed to be 100,000. They now have 9 million users. When I go I take a taxi, I pay the taxi driver with this electronic wallet. They use every day with very small amounts for transactions. For example, I went to the informal sector just to buy vegetables, for example. And everybody use the electronic wallet. So this is a very interesting opportunity. I cannot say more because we are analyzing and trying to convince some entities just to participate with this regulatory sandbox, but this is a very interesting opportunity. Besides, a group of these informal self-employed workers see in this defined contribution scheme a very interesting opportunity. Because, unfortunately, because the Peruvian government decided to have an extraordinary access to the pension pot. So, for example, we have 20,000 workers enrolled to the DC pension system per month. They used to enroll 5 years ago. Today, nowadays, we doubled this number. 50,000 of new entrants to the DC pension system. This is an opportunity, but enrollment is easy. The difficult thing here is to contribute. That's a challenge.
On the contribution and for low income workers, it is interesting based on our discussion with several ministries and also with the labor union. Because in Indonesia right now, the focus of the labor union is still on the day-to-day or current minimum wage and something like that. And when we push the agenda of pension, they think that they are not their priority right now. That's very sad to see that. But in an economy where you have lots of labor in manufacturing and other construction and so on, where the labor unions not really think of the horizon of old age, something like that. And we in a policy maker try to push this agenda, but I think we need several times to do it. And we successfully put an article in the new financial services omnibus law that will have some additional on top of pilot one right now. It's a mandatory, but will be a choice to choose the operators. This is a DC plan, but it's the basis in the law. Based on our experience, it needs another 3 or 4 years to put it into implementation. Hopefully, they will cover all low income contributory system. Thank you.
One thing on the people on the very lowest income is all of what I was saying. In an ideal world, that comes in conjunction with a basic poverty alleviation payment. You see it in lots of countries at a very low level, and it's, this is a kind of a twin track approach. But of course, if you have nothing, then you have to take the decision of where you go. It's also worth mentioning the family that even if family structures are not the way that they used to be, even if the family can solve 10% of the problem of multi-generational households and sharing within families, I would urge people not to forget it in the way that maybe some Western countries have. But if you're here or in East Asia, South Asia, it's still an important part of the picture. One other thing in terms of the lower income people is just also the incentives. So tax incentives, as we heard yesterday, don't make any sense if you don't pay tax. And so countries experiment with flat rate contributions. The Bangladesh scheme I mentioned, there's a specific one for low-income people where half of the contributions are paid by the government, but the other ones for the other higher income people are not. So you can target it, say India has experimented with individual programs for the very low income. So kind of having different ways into the system, but having some kind of core administration and investment which allows you to make sure that you don't lose the pension pot. Because it's great what you were mentioning about Nigeria and the ability to transfer the pension at retirement in West Africa. One of the issues though with migrant workers is often you're there for a year and you stay for 50, or you're there for a year and you leave after a year, or anything in between. And so it's quite a diverse, highly mobile population, and lots of countries find it incredibly difficult to find people even within their own country when they have multiple plans. Finding them cross-border can be very tough. So the migrant pension aspect of the policy may need you to be able to transfer earlier, but ideally transferring from one pension that you've been getting in the host country back to a pension pot that you already have in the home country, so you're kind of amalgamating, stitching together all of these things, rather than kind of dissipating the impact.
Thank you. Yes, please. The microphone is coming. Pablo, be ready to respond to the following question. What are the views of the OECD about how to integrate pension for informal sector? Yes, please.
Yes, thank you. My question is directed to Moch from Indonesia with regard to the fact that the informal sector workers will not save on their own. I bring this up because Uganda just concluded a study similar to yours, and one of the challenges we face is that if you have low tax capacity and you are proposing tax finance incentives, how are you making the policy case in Indonesia? Thank you.
Thank you for your questions. I have to have a disclaimer that this is thinking in us a regulator, because tax department may not be agree with us. So, but our thinking is because right now we have a EET, the model. However, we in Indonesia tax ratio is so low, as low as well, probably the average is less than 20%. So the incentive is not that what we call not interest for them. So what we're thinking is that we try to put more incentive on the investment, and also there will be something like automatic enrollment, and rather than they have to give a separate registration between the goes to in pension body or pension funds, and have a separate or dedicated registered tax return yearly. We try to make it, if they agree to have one system, that every time you goes to the pension, will goes to also the report will goes to the tax office. In other developing countries, perhaps this is already there, but for Indonesia, with the vast areas and so on, this still a problems. And we know that this kind of incentive, along with others, so the administrative fees and so on like that, the cost, I mean, it will be give them seamless and easy to enroll in a pension with they will what we call it, they will really feel the benefit, rather than right now there are some what they call it, the administrative burden if you are also enrolling in a pension and you have to claim your benefit or your tax deduction for the tax office. I think that's most of one. And then the other is by giving more incentive, because right now it's not all of investment portfolio exempted. So mostly like capital gain is not tax incentive there. It's only on the only interest or banking and so on, and also from the property there are no incentive there. So we try to talk with the tax department on how to expand the or flexibility in a tax regime. I think that's what we rely on. Thank you.
Thank you very much. Yes, please.
Hello, I'm Elio from the Mandatory Provident Fund Schemes Authority of Hong Kong, China. I have a question about the policy recommendation or policy preference for extending pension coverage to platform workers, which is an emerging sector of the informal worker with the advance of the gig economy. And so Will just mentioned the landmark case of Uber in UK, and so it effectively created a new class of worker relationship beyond the traditional dichotomy of employee and self-employed persons. And but that is in a way a limitation because it's just one type of labor benefit, so we stop there. So some labor unions in our jurisdictions are trying to push for a formal recognition or direct imposition of this employer-employee relationship on platform workers. And so I would like to seek the panel's advice, which way would be the way to go, and particularly in the developing country context. Thank you.
Okay.
I mean, it's a really good question because you often go to a country, whether it's developed or developing, and you see the full list of social security benefits in the formal sector, and it can be pretty large. And it's not to say that any of those individually are wrong, and there's lots of good ILO conventions about what should be delivered. But if you're ending up with contributions which are effectively 30, 40, 50% even of the wage, I think it's very difficult to transfer that model to the relatively low income side. So I think the question would be, start somewhere. And the thing that you're guaranteed is that those low-income workers will have no pension. Now, for me, obviously, maybe for this audience, the pension one seems to be the most pressing. For the individual, it's probably life insurance, which you can add quite cheaply. So not necessarily the full contributions for life and health, but adding a small amount of insurance, at least you can start having some of those benefits. And thinking through the migration and the remittance side, some of the remittance providers offer kind of freemium products. So if you send your remittance with us, you actually get free life insurance because it's a kind of business advantage. So there are ways of doing it quite cheaply. So I would sort of go through, but in an ideal world, you'd be able to have the full list, but I think for the country context, you would take a more limited one. But as I say, the one you're guaranteed that will have least is, I think, the pension side of things. And what you're doing, I mean, pensions, from the discussion people had about access to pension funds, I think I'd say two things. One is, of course, housing is expensive and people want housing, but you're finding a kind of a pension solution to a housing problem. And it's just because there's money in the pension. Well, you could use the money in the pension for health or education or roads or anything. So don't use a pension solution for your housing problem. And the second one is pensions in a not in a sort of joking way, is a form of time travel. And you're trading the meal you're going to have when you're in total poverty age 70 with the money you need when you're a 40-year-old, and you've got lots of these different things. And the one guarantee is if you spend that money now, you are definitely not going to have it when you're 70. And no one is doubting that people have a lot of problems now. But what we know, unfortunately, is that you will guarantee that your problems are going to be worse if you're a destitute 70-year-old than if you at least have the chance to earn a little more. So those are just to make those 2 points.
Okay, yes. It is interesting that, thank you, Eric, you already mentioned about Uber. Uber is not longer active in Indonesia since, I think, about 5 years ago, but we have the same platform like Gojek and Grab. And it's around 3 to 4 million drivers of this kind of. And Gojek is, or Grab is more moved not only for a hair ride, but also for one single stop for GoFood, Go Massage even, go clean and that kind of go beauty. You want to have a homemade home services beauty. Yes. But we look at this model, this platform. Of course, for the platform, probably today we talk about your platform FTF, and we are single platform for every provider is very good, and we try to move it. Because right now, the Gojek is a very fertile land or fertile business for micro insurance, especially travel insurance and also insurance for goods and services that they sell. So we try to have a understanding and try to understand the models and really push the insurance in the pension industry, mostly the public fund, which is in our term is financial institution offered by banks and insurance to tap into this lucrative market. Hopefully, we will have a fruitful discussion with the project on how to put the pension as part of them, either for the drivers but also for general population.
Thank you. And another issue is to know the customer. How can you offer them something, a product, a voluntary saving alternative? You don't know this group. You must be close to the group, to profile, to analyze. That is an issue because pension regulators are not, the profile is to be lawyer. We have lawyers, economists, engineers, but we must be close to the worker, to offer and design a regulatory environment just to promote voluntary saving for the time.
Thank you. Yes, please.
Thank you. My name is Ganji. I'm with Real Investment Management Consulting firm of factories. My question is directed to both Elio and Moch. Here in Zimbabwe, we recently have passed regulation that then makes the required regulation for the establishment of micro pension funds. My question to you gentlemen is, in a world where there's so much pressure for instant gratification, and also in a world where some industries are looking outside of their traditional spaces to look for solutions to address some of their problems. I'll give you, for example, in the medical skill space, where we have seen them introducing, for instance, your skill membership being linked to your due membership, for instance, and then that you get discounts for your skill membership depending on your attendance to the due. And also, we have seen them introducing things like membership to loyalty rewards and lifestyle rewards. From the experiences that you have had so far, are there any ideas around that you probably would consider would be an attraction to especially the younger generation for joining the micro pension funds? Thank you.
Thank you for the question. In 2015-2018, I'm involved in the micro insurance program in here in Indonesia, in my home country, Indonesia. And what I found out is that for the at that time, tried to think of how did we expand into micro pension, and we found out in the micro insurance scheme that if we want to reach a vast majority, which in Indonesia is digital is the key. And by doing digital, it shouldn't be solely for one insurance company per se. It should be a multi-provider platform, or we can have aggregator or something like that, some stuff. However, this will ask or the answer the question of in our case the youth population who want to tap into digital and they want to have a power in their pen, which is the handphone. So, for example, for the in capital market, how they can reach from just around 2 million to 11 or almost 12 million because they have a micro investment. as cheap as 100,000 rupiahs, is around $8. You can invest in a mutual fund. And it is in a platform, goes by run by the stock exchange. So when we talk about this kind of the key success factor for this type of operations between the insurance provider and mutual provider with the platform is that it's not it has to create additional benefit or additional value both for the company, the platform, and also for the target market. But also it should be part of the business process itself. Should be not as an addition that make them has to create another application and so on. So that's the way it began with the micro investment and also the micro insurance. But pension, it's a bit different because our pension is a bit strict. It has to be an annuity. There is no very small lump sum, and it has to be a periodical or investment contribution. So it is very proportional type, even for the public work fund. So that's what we try to push the agenda in the law and try after that to go to the. So it has to be a holistic one, but we, from the regulatory perspective, should put into account the interest of the players and also the interest of the target market, which is the population. Thanks.
Thank you for your comment. I agree. We need a holistic point of view. We need, behavioral and technological tools are very important. We must use that. But those tools are not enough. You have to combine with some specific products to have to make or to implement different kind of solutions for these micro contributions. In Peru, as I said before, we have an opportunity because there is a possibility of access to the pension pot. It's not easy, but this is an opportunity. We would like to change the law, just giving the opportunity to access to the pension pot just for emergency or any specific situation. But the liquidity is an issue, as an interesting issue for this group. It's not a solution, but you have to capture these attractions of these workers and we want to make them to contribute for saving. Just how to combine the short term with the long term. Maybe liquidity, maybe an access to a health system because they are not protected, for example in Peru. So maybe I link with this. And to find some community device. Maybe to link to, for example, for taxi driver, they have to pay a specific device just to save to save the gas or the gasoline. So they must pay. And if you put a percentage when they put the gasoline at the car, you can make them to contribute. For example, we're trying to make this experiment with some taxi drivers.
I've been for a year from Zambia, Pensions and Insurance Authority. I've enjoyed the different delivery channels, especially with regard to contributions such as gas stations, pharmacies, and the like. I've also enjoyed the Indonesian capital market, which is saturated by individuals, participants, retail, which is a very good thing. And I'm thinking that you must be doing a lot of financial education in that aspect, and it is really rewarding. And I was also impressed to see that the Peruvian study, which you did, had 71% of the participants recognizing the importance of retirement, and yet very few people are actually serving. Now, the biggest challenge, I think almost all of us who are here are already doing something in terms of extending coverage to the informal economy, which is very important. But then, how do we balance out the benefits at the end of the day? Are we sure that the benefits will be adequate enough to alleviate poverty and avoid destitution at the end of the day? Aren't we going to be beaten up by these informal workers once they retire and they find that the money they are getting or annuity they are getting is actually even smaller than the social cash transfer, where they are not even making any contributions? How do we balance out that? Thank you.
So, you can mention before that the member from Rwanda here. Yes. I would be very interested to know the main challenge that you met with the AIOS as a long-term savings scheme. So the first panel.
That's a very difficult question actually for the regulators because to predict what behavior of our target or our population is a bit hard, especially for a low-income population when we have to deal with other more pressing issues for them. So, for example, when we talking, there are some problems in the economy that they will be put more stress for them compared to the middle income and high income. So to answer your questions on how to rate, we have do we have the cash transfers, and it's a bit lot of things recently. We put it into more digitalized. So that's why this is also one of our means to put more literacy on the digital. However, when we try to push them to spend some of their daily income into pension, which is 25 or 30 years later, it's a bit hard. We do have some heroes. We know that in in Central Java, for example, I've met one of regional banks, pension funds offering for the public, who has a very champion. There is a guy or a bunch of informal workers there. This is the cleaners. They spend almost 30 to 40 their monthly wages into pension, but it's very rare, and it is very, very, very unfortunate that most of the people will see how to struggle with their bread today rather than thinking about what they will say for the future. So yes, again, I think what we learned from this conference, also from Elio, and to make it as a cash or something like that, probably will be put more for that. We already thinking about using the electricity, or also because some of us are very keen to our cell phone, so we probably put in the pool side and so on. So, but it's still in a table, and hopefully we can see the result in next years to come.
To promote voluntary savings is painful for us, and as you can imagine, for low-income workers. So being able to have and to offer all the opportunities to save is important, but I'm afraid maybe it would be not enough for the future. So part of the role of the government would be to give some help with some sorts of income, but it will be very, very expensive in the future. But I am afraid that you have to be prepared for the future. We can implement different kind of incentives but this is like a trial and error. So you must innovate, you must adapt to the workers, to some technological advances maybe that would be cost effective, this kind of products. But as a government, I guess that we have to be prepared for the future. Maybe we were discussing about some kind of seed bonus, seed bond. For example, you as a government who needs the specific help from the government? Just to be prepared, but just an idea. The thing here is that we have to be prepared for the future. Not only the citizen giving this opportunity, but also from the government trying to have enough money, maybe some money to help them. But we must offer all the opportunity and be prepared for that in the future.
Just a very quick thing on the convincing people and what will I get back and will it be the same as the government? I think financial education and being very specific about it can be quite tough, but I think it would be well worth just constantly stressing the message that the old age solution is public, private, work, family, and just some simple messages, and there's no choice. So it's not really a technical argument, it's some mixture of the four. And I think most people can get that, and that's the kind of challenge to people, rather than exact formulas and where the money's going to be invested, which is usually kind of beyond people.
Good morning, everybody. As we discussed yesterday, one of the key recommendations of the OECD is to design pension systems in a way that are completely inclusive. So they are they have parameters and they are designed in a way. The pension plans are designed in a way that there are vesting periods, there are income limits. There is also the problem that was discussed yesterday about portability. So they do not allow many people that have, as I mentioned yesterday, non-standard forms of work to have access to save for retirement. And this is very important. And then the other reason is because the capacity to save is low, as it was presented here, or basically because they just don't want to pay it. They're trying to trick the, if you can say trick, but the issue that was raised, platform workers and all the different type of gig economy, all these type of jobs, and the flows between non-formal worker work and formal worker work makes this extremely difficult. As you mentioned, dedicated plans, like some countries have done, is very important. To allow the whole issue of, that was also mentioned here, erratic income streams, temporary and seasonal work. Or if you don't create plans for all those people to be able, gig economy, platform economy, temporary, seasonal, non-standard streams of income, then they cannot save in the plans that exist. And sometimes it's not because they don't save, it's that they just cannot save. And of course, the idea that was put forward here also, that having special plans for people that can put €1, $1, one currency unit, is very important because the actual plans that exist don't allow them. And so the issue of non-standard forms of work that covers all the topic is essential. And for the very low income, there is the safety net, and it's important that they know there is the safety net, and the access to the safety net maybe can be linked to the fact of saving for retirement. And they will see that the saving, even if they only put 1 cent into their account, it brings them into this safety net that will cover them tomorrow when they retire. Elio mentioned the 65 plan they have in Peru, but they also have it in Indonesia and in other countries. If people feel that saving a little bit, that the plans exist for them to save a little bit in a very discontinuous manner. And the safety net will always be there to protect people working.
So we've closed now the session. So please join me for a big applause for our panelists. Thank you.
So now we have come to the end of session 4. We still have one more session to go. Yeah. Okay, so the Deputy Minister will be leaving after lunch. So he wants to say just a few remarks before he leaves. But as he comes through, I want to advise that we'll be breaking for lunch soon after the Deputy Minister has given his remarks. So we go for lunch and make sure we come back on time so that we finish the last session on time. Thank you very much, Deputy Minister, sir. You can continue.
Thank you. I could hear a few tummies growling behind me, so it will be brief. I was about to just quietly slip away, and then Madam Commissioner asked me to just bid farewell to this very diverse and highly knowledgeable group. I'd like to thank you, especially all the visitors, for coming and gracing this occasion. This knowledge exchange platform has been extremely beneficial to us as Zimbabwe, and I'm sure to everybody else. And I do anticipate that we'll continue to have such engagements, especially in a changing environment like we have here in Zimbabwe, where your informal sector is becoming the bigger part of the economy. I do hope that in that particular regard, as regulators, you can come up with solutions, you can come up with frameworks so that we're able to encompass and include everybody to save for the future. With those few remarks, I thank you and I bid you farewell. Thank you.